Hello and good weekend. This is Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 14th of June. As I'm recording this, there's about 12 hours left to go in today's candlesticks, so anything could happen from the time that I button this up to the time that we start to print a new candle. But quite honestly, we've been in this consolidation for more than a month, and it's being held hostage by the larger markets. So we've had almost 100% correlation with the larger financial markets. This is the S&P 500, the biggest index in America. And if we take the cue from here, we were getting into exhaustion. We were getting into that euphoria phase of the rally. We had disgust, disbelief, acceptance, and then euphoria. We see the same S-shaped curve everywhere through these markets, and a little bit of exhaustion on the daily chart. And as you guys know, the fastest way to recharge a chart is actually to go back down from whence it came. So this is a very quick recharge, very quick dip so far. What happens from here will kind of dictate what happens with the rest of the markets. Whether we break above here and this forms a slingshot, or whether this simply jumps up and rolls over into a lower high, we don't know. But we do know one thing right now is that cryptocurrency as a role will be influenced by what happens to the larger markets. We've seen this ever since the crash back in March. Now, this wasn't always the case. Back here at the beginning of the year, we had almost an inverse correlation between what was happening with the stock market and cryptocurrency. But since the bounce, they've been treated like anything else as a risk asset. And this is why we have now a lot of people that are jumping into little Robinhood accounts and trading the equity markets and looking for bargains there. And they're finding the same lessons in that market as they found over the last 2 years in the crypto market. So let's do a quick dive into Bitcoin. What's going on with this one? We can see the two expected moves that we set up last week. I've got some new numbers for today. So if we look at the 26th June alternative here, we'll just get this one out of the way for a second. So 26th June, if we look at this, we have an upper bound of 10,262. So this has been pulled in, and that tells us that implied volatility is declining. 10,262, that's pretty close right there. And then we have the lower bound of 8612, and this is into 26 June, 8612. So we'll pull this up here, and that's pretty close right there. So there's our expected move into the end of June, a couple of weeks from now. Now we can look at the one for July. And of course, this is going to have a much bigger expected move because there's more time. More time means more potential for movement. We have an upper bound, and when I say that there's a bound, or I show this probability cone, this is a 68.2% probability that the price will stay in this. So you can see that this is a relatively small one for the end of June. Over the next 2 weeks, we're not expecting to see much movement from there. So this is the options market, some of which are the smartest traders out there in terms of being glued in with what's going on, and they don't think there's going to be much movement going forward. So let's do this for the end of July. Let's see what we have to work with, and by all indications, it looks like this is also going to come into 11,212 is our upper bound. 11,212, we'll get that pretty close. And then the bottom bound for this on the probability cone is 7662. 7662. So we haven't seen much change in this one, but it has come in slightly. And that's close enough. All right, so there we go. There's our probability cone into the end of July. Now, we'd love to see this continue higher, break above 10,000. But right now, it seems like every time we get up to 10,000, we're seeing rejection. But the thing that keeps me positive for this is not only the monthly log chart, which I've brought up again and again, which looks like just a simple consolidation albeit 2 years of simple consolidation, working off that 2017 monster rally, but it's time to go. The second thing I'm seeing here is on a more short-term basis is that, yes, while we continue banging on that ceiling at 10,000, the lows are getting higher. Every time that we pull back, it's to a higher low. So that's a good sign. But again, the caution that I have for you guys is that this is all going to depend on the larger equity markets breaking back out again and doing that slingshot move out to the upside. If we see the larger equity markets set up with a lower high and then roll over, that's going to bring up the next round of margin calls, redemptions, those kind of things. And we know what rolls downhill. Something else that I'm seeing here is that as we go over to the skew site and look at the implied volatility, this is the net implied volatility. And the implied volatility means the implied forward move. And the implied forward move is getting smaller and smaller and smaller. Now, there reaches a point where everybody sort of goes to sleep on this. And this is back to the same old thing that I always talk about, is that range contraction leads to range expansion. When we wind up that spring for long enough and build up enough potential energy in that chart, then we're due for a big explosion. And if we put on the energies for this, we can see that once again, we're up at a highly charged area on this chart where we're likely to see some forward movement. So a little bit of disparity between what option traders think and what we're seeing on the chart. And a lot of times that usually leads to some pretty significant moves. Quick spin through the top 10 here, and I'm staying on top of what is currently offered by Coinbase, which is probably the number one way to for a coin to introduce itself, is to get on Coinbase. So some of these patterns are still quite good. This is Ethereum, still looks just fine. This is a consolidation. You can see the massive amount of energy that this one's got on the daily chart. Okay, Ripple still looks poor. Litecoin, a lot of these are just going to be somewhat, the haves and have-nots that I went over earlier this week. A lot of these are just very poor. Be selective about what you get in. Don't jump onto a poor looking chart like this. So most of these don't look all that good. Even Chainlink had a bad week, but generally is looking good. Now here's 0x. This is obviously a much more healthy looking chart. Basic attention token, much healthier looking than many of these as well too. Here's a new one. This is Kyber Network, and this one actually looks relatively good. We see volume coming into this. Now we do see exhaustion, but what we would expect to see at this point is just a consolidation or maybe even a pennant pattern into this area as it builds back up the energy. But this one actually looks fairly good. So this is a recent addition onto Coinbase, and you can see some of the volume that's come with this. Some of the other ones, again, a lot of these charts really look the same with the exception of this one does not look good. Monero actually doesn't look that bad. It's just kind of quietly grinding higher, but you can see that just about everything took it on the chin last Thursday. So last thing I'll say is don't go to sleep on this market. We're going to have one of these epic moves coming very, very soon. Set up alerts, box in the price action, and let yourself know which way this is breaking, whether or not it's breaking to the upside. Obviously, a break above 10,000 would fire off the next set of alarms, or watch for a break below 9,000. So we're into a 1,000-point box right now on BTC. Price could continue to go sideways within that range, but eventually at some point fairly soon, we're going to see a break one way or the other. And as I've said many times, even a break to the downside is not necessarily bad because that's just a larger time frame pullback. If we just focus on one time frame, we lose the context for what's actually happening. That's it for this weekend's report. Thanks for listening. We'll see you tomorrow.